All right, good morning. Let's go over today's trade plan. So in the overnight session, all the markets are pretty balanced heading into the open. And like I covered in yesterday's recap, the bias is still very neutral here. The markets can make a move in either direction. So off the open, we're going to be using the pre-market support and pre-market resistance zones to determine which side is in control. So we have resistance at 68 to 70 half and support at 62 half to 64 half. In the event of a break above pre-market resistance, it would confirm short-term control on the buy side and bring the 74 quarter to 76 quarter and 77.75 to 78.75 resistance zones into play as the primary upside objectives. Now on the upside, because this is following a pretty decent liquidation move, we can still get rotational movement off the zones, but you want to be careful shorting it too early in the move, right? So for example, let's say, we actually get just a breakout above 70 half. Well, in that case, 74 quarter, 76 quarter, even though it's valid resistance and you can get rotation, you want to be careful fading it because it may just be the beginning of the upside move, right? And so in order to short above 70 half, it's better to time it in real time where the setup presents itself in real time. The markets get short-term exhausted, and you're entering short at really good trade location where you have good reward to risk. Because if you're shorting initial resistance, realistically the market can easily go up to 77.75 to 78.75 before there's any decent rotation even. And we're talking like, 3 to 5 points. Not a huge failure, because then you could just balance above 70 half. So just keep that idea in mind that, we do expect sellers to be active at resistance, but you don't want to get in too soon, when the move is just starting and, the momentum, if the momentum is really high to the upside, right? If the tick is showing a lot of upside momentum, volume's looking good, and it's just at the beginning of the move, then you want to be cautious shorting it because, the market could be, heading back up towards yesterday's high. And, we saw in TF, for example, that it completely recovered its downside move yesterday in the day session. So, it's very possible that if we get a strong breakout now and a reversal, we could go back up to 80.75 to 82.75 on the day time frame. So you just want to be aware of that and then just time any short entries accordingly, right? Wait for exhaustion, wait for some of the volume to get out of the way, manage risk accordingly, knowing that it could just be a rotational move, not necessarily an all-out, failure. On the downside, it's a little bit different because if we get a downside move, it would be a continuation of yesterday's liquidation move, and it can go a little bit lower. So we can get a little bit more directional conviction on the downside than on the upside, right? So that means that I'm more open to fade setups, right? So short setups above 70 half than I am to long setups below 62 half. Below 62 half, we can get some continued liquidation, and we may not find any decent buyers in this market until like 49 to 50 half, or even 44 to 46. It's very doable on the day time frame. The volume is still looking good across the board. The markets are running on above average volume, so we can still have a pretty decent range on the day time frame, right? So if we start breaking lower, again, 49 to 50 half is a potential target. The high odds target below 62 half would be the initial support zone. You'd essentially have like a double bottom at that point if we actually reversed off of it. But that area has been tested already. About a week or so ago. So the buy response might not be as decent this time around. It might just be a little rotation type move, and then we hold below 59, and then go down and test 49 to 50 half, and potentially 44 to 46 before we start seeing some, better buying in this market and some balance. So in either case, the important thing is to know that, right now the bias is neutral. we're open to a move in either direction, right? We're not locked into any view right now, and the markets can still move higher from here, or they can continue breaking down lower. I don't consider yesterday to be a true trend day, and that's why the bias is not bearish, and we're not looking for just a continuation setup. If it was a true trend day where we closed, near the lows, then I would be more inclined to short today. But right now, with yesterday being very balanced at the lows, we know there's some weakness, but if we get above 70.5, then that weakness can be erased. Bigger picture, we're still within a balance area, so just have to keep all that stuff in mind. On the econ calendar, we have consumer sentiment at 8:55 a.m. Central. That could serve as a catalyst, but let's just use pre-market support, pre-market resistance to establish our directional bias. Until then, it can still go either way. Let's just keep that in mind. And then once it starts going, then there could be a little bit follow through, right? Even on the upside, if it starts going, it could go up to 77.75 to 78.75 before we get some rotation. 80.75 to 82.75 is not out of the picture. We could certainly test yesterday's high and then start balancing. So those are the main scenarios heading into the open. And on the day time frame, let's see which way ES breaks, and we'll take it from there.